Hey everybody, it's Dave Foxton again. Welcome to the Index Strategist. So today I'm going to talk about something that seems like it's on every financial TV show, every talking head on the internet's talking about it. So hey, why not join the crowd and do the same thing? Um, Oil for me has been something that I've looked at quite a bit. Run this on short-term algos. We run this on sort of our longer-term algos. But I actually want to make a little bit of a case potentially, and I hate to kind of feel like this because Dennis Gartman is sort of saying the same thing. And generally, that's been a pretty good case for not going with the market. But in any event, what I'd like to do is I like to look at the oil market, and I'll talk a little bit about some different perspectives of where I'm looking at. I made a comment a few days ago on the short-term side, short-term algos potentially with a 3 to 5% gain, but I actually think that you're probably, and in all fairness to Dennis Gartman, I actually, he's looking for a trading range, and so am I. I'm actually looking for a pretty volatile trading range on oil. Over the next 12 months, and I think that you'll probably be seeing minimum 25 to 30% pops and drops as oil tries to sort of go into the sideways market. We don't really have anything that's going to get us in there, but if everybody remembers about how this program works, is that from an algo trend perspective and from uh, basically the work that I do is we generally want to see things start to evolve before we look to jump into. So, we're willing to give up, some trading off the bottom so that we're not constantly going into and being whipsawed out in losses, especially when the trend is particularly negative. Because in the case of really negative trends, and oil obviously is one of them, what generally tends to happen is that there's a lot of thrashing around for a while before you get any kind of major turn in price. As people that have been long and lost money tend to want to exit out of the price, and those people who want to sort of be in to the product can tend to be a little bit more patient. So from an algo trend perspective, we can see the algo trend is up on our screens right here. So just quick overview or refresher on what the algo trend is. The algo trend basically is three trading systems. What we do with the trading systems is we track the equity curve and the performance of the trading systems. I'm not overly concerned about making money using the signals of the trading systems. The idea is that the trading systems provide us with a relatively consistent analytic process, and the idea is pretty straightforward that the trading systems, each one of them has a bit of a bias. So in the case of the top left, this is a short-only trading system that has obviously bias to the downside and tends to perform well when prices are declining. The trading system on the bottom is the long-only trading system, and it's got an upside bias, so it tends to do really well when the markets go up. And the most important of the trades, because the first two trades that I just described, I should have pointed out, they also have what we call a bit of a chop bias, so they tend to do well even if the market's necessarily going in their particular direction, if the markets are going up and down. The last model that we have is what's called I call it the B2 trend. The B2 trend model is a bullish bias model, but the bullish bias model tends to do really well when the markets are trending and moving to the upside, doesn't do well when the markets are thrashing around, and doesn't do particularly well when the markets are going down or prices are going down. And so, as we can clearly see in the B2 trend, I mean, it's been major negative since the fall on oil 2000. There was some trading opportunity in here, but the short. But at this particular point, and I pointed this out a few weeks ago, is that we're starting to see some signs on the B2 trend model that we're actually, in fact, getting pretty close to a bit of a bottom. Same with the bull side trend system right in here. And if you look closely, what you'll see where the cursor is that this is our point system, our ratings and ranks models that we look at. And what you can see on this particular case is that the trend, even though everything is still pretty negative, the trend for this is actually starting to rise. And generally, you will see this type of behavior as markets begin to bottom. And again, in this particular case, you start to see, trend building and positive activity in the trend starting to happen at this particular point. Now, the bear side is just starting to show something on the negative side at this particular point. So the bear system is doing well. It's been making money for the past 6 months, whereas all the other trading systems, both this system and this system, haven't been making money. that tends to be something that you would expect when the markets are going down. But as we get closer and closer to crossing over these major reversal lines, that's where I believe that there's going to be an opportunity to trade oil. I don't believe that it's going to be an opportunity to just buy and hold, because I don't believe that the market is going to be in the environment of buy and hold. But I think that what's going to happen is that there's going to be plenty of trading opportunity that's going to come down in oil. Now, the other thing that I wanted to point out is this is in our indicator data. We don't talk a whole lot about the indicator data, but I think it's kind of really important to notice. We have an indicator here called the ALR. The ALR is a model that I've been tracking for since the mid-90s. The ALR is an excellent gauge of short-term supply-demand, the forces that sort of dictate markets at peak and strength. And generally, in order for you to have any success on the upside, what you really need is you need to have sort of short-term buying strength greater than or equal to short-term sell strength. And so what's starting to happen, as we can see here, is that even though the prices are going down in this particular point right here, what we're noticing is that there's a lot more peak buying strength. So if you can look at my cursor here in the bottom covering over this, you'll see that the peak short-term buying strength is quite a bit stronger than it was during this particular sell wave that occurred in here, and more notably in the sell wave that we saw back in that started from October. And generally, that's the type of behavior that tends to occur when markets begin to reverse, is that you have people looking to buy. So you see waves of buying come in, waves of sellers step back, sellers are still there. So right now you're still seeing sort of selling pressure, which is basically greater than the aggregate of buying pressure. But the key is that it's what I call a stealth, sort of bull scenario, because generally, if you want to refer to it in my mind as smart money, but basically people are nibbling at the market. My expectation for this is that this will manifest itself into, as I said before, the reversal in the price of oil. Again, I'm not looking for anything huge on the upside, but basically on the USO ETF, I could easily see oil trading between a band that would be 35 to 50%, anywhere from, and that's been the historical average. So if in fact the buying pressure actually begins to get up there, I would not be the slightest bit surprised to see oil up 30 to 40% from existing levels. But there's going to be a lot of trade that occurs within that. So the other thing that I look at is at the bottom is this our relative trend value. And we tend to point this out. This is available in the Algotron reports. But basically, the relative trend value is something that shows whether or not the short-term or medium-term trend. So let's say the 1 to 3 month outlook analysis. The trend value data has been rising, even though everything has been falling. The relative trend value of oil for the USO ETF has actually been declining relative to has been increasing relative to the S&P 500, and that's generally going to be a pretty good sign that usually that's something that you tend to see when you're about to sort of receive some reversal, especially if it's something that's happening when the market's going down. Because if the market can turn and head to the upside, and it looks like it's probably going to do that, my guess is that what we should see is, again, another sort of piece of information that leads me to believe that you're about to see the oil market begin to move from this big decline period into a nice trading range. And just to sort of top up or follow up some of the comments that I made before, this is our short-term algorithms that we looked at. So when we had this buying signal that came in, a few days ago, around the 110.40, and I posted it sometime around 110.10 or so. So the trade's actually off somewhere in the neighborhood of about 4 or 5%. But what's happened is that we've managed to get above sort of our on-off lines for some of these short-term algos. And in fact, both systems are now long. This one's had a much better track record. The trading system on the left tends to have what we call a little bit more of a bearish bias. So it's obviously going to perform real well when the market's going down, and in fact has actually returned probably about 70-80% relative to the actual price of oil. But even though we're moving up and down at this particular point, I still believe that this trade is probably, what I posted for was 3 to 5%. So the stop point on this is quite a bit lower at this point. We're really not looking for oil to, we've got about 40 cents from the existing level. So it'd be about a 10% trade. And I think that that's something that you need to look at from volatility perspective. As I said before, if you're looking at getting trading profits and you're looking for trading range, it's going to be probably 30 to 50%. And that's what I think we're going to see over the next year in oil. A lot of opportunity to sort of get in and get out of oil. So again, this is our update on our algo system. Just a quick viewpoint also when we're looking at this is I'm going to look at these are 5 different algos. So we run dozens and dozens of individual algos with different parameters. And what we can see across the top is it generally the bullish biased algos are doing what's expected. But even the bear biased algos have not had a real good run over the past year or so. The selling has just been too intense for these guys. But you can see that the algo that I've got my cursor over, this is a bear biased algo, so it tends to jump in, but it's also looking for chop. But you're starting to see that a lot of these algos are getting close to and are nearing a point where they look to be going through some of these major long-term trend lines. So as I said before, I'm not looking for anything major on the upside, but when algo trading systems begin to turn, what it means is there's going to be a lot of trading opportunity. So from an investor perspective, you know what, over the next year in oil, there's going to be plenty of opportunity to do sort of exactly where I think investors need what to do in a market that's going to be up and down, but with not a lot of direction over the next few years, is take some profits when there's opportunity, and then flatten out and looking for something different, when the data says to do it. So anyway, that's your oil report.